Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Tuesday market webcast. Okay, we talked yesterday about the fact that we were slowly bleeding up to new all-time highs. We took out the 32.25 high. We printed about 10 and change above that. That was in the morning, and we spent the afternoon just kind of coming back into this 36 to 38 area and just chopping it up. Pretty much chopping it up until 4 in the morning. And you saw a little bit of a break as low as 31.5. Now we're right back up into 34. So, two things. The bulls didn't really grab the reins beyond the 42 initial move up off the open and drive it up and try to achieve a move to the upper band, which in my opinion would have been much more achievable yesterday versus today. You've seen the upper band on the daily chart yesterday was about 52. This morning we wake up at 60 and change. So they put those 10 handles right back on, and they're making it more difficult to go up and reach that band. Not that they can't do it. It really has more to do with the bears than it does with the bulls. And what I mean by that is, when you look at the bears, here's an hourly chart. As long as they continue to allow the mid band to be support, and you can see they've spent a couple hours below it now, and this has probably been the best chance they have for any kind of a meaningful pullback since Tuesday of last week. So in about a week, they could potentially go back and test the churning area here right in 24 to 26 from yesterday. What the bulls want to do is hold the prior all-time high, 32.25. Resistance becomes support, you make a higher high, and you continue to bleed to the upside. That's why I say it's really got more to do with the bears than it does with the bulls. The bears have to have a pulse. They have to participate, they have to fight back. They have to give these longs something to think about. Right now they're not. If they do, then as we push through the week, you certainly have the potential and you have the volatility, especially tomorrow. Tomorrow at 2 o'clock, you got FOMC, Powell's doing a press conference, the whole thing. You have the opportunity to push down and go ahead and take a look at weekly pivot. If it goes the other way, well, we won't, they'll take it up and they'll just keep on going. So tomorrow at 2, of course, will be critical from a volatility standpoint. So it being the day before that, I look at it a couple different ways. I always have. You could see them try to set up the tape, either to walk it up or pull it back. There's other times where they'll just shelve it. I get concerned they're going to shelf it because we're at new all-time highs. So basically we're in what was 2 days ago was blue sky. And if neither side feels confident in doing much before we get the announcement tomorrow at 2 o'clock, then we're not going to go very far today in either direction. And if that's the case, the key thing is to not overtrade, take your profits where you find them, make your day, move on to the next day. And we'll get into tomorrow. We get ADP, we get FOMC, and then as we get into Friday, then we get jobs. So we get FOMC and jobs in 1 week. So the higher volatility events have yet to come. So be careful today. See what the tape wants to be. Be very aware if it just can't move and you see things start to stagnate. Don't overtrade. Don't fight either side of that. All you're going to do is burn commission, take paper cuts, and you won't be in as good a position to trade the more volatile events later in the week with a clear head. All right. Take care. We'll have some more stuff out on social. Come check out the room. Trade them well. Talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princeton Trader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade them well.